thank you for coming through for this media brief. It's a very important occasion for the Commission because we get to enlighten you on what's going on in the market, especially in the last quarter, which is what this media brief is meant to disseminate. With you as our partners, the media, we value your contribution and your support to the Commission, because without you, we would not have the public getting to know what is going on in the capital markets. So, good morning once again, and thank you for coming. With respect to the performance of the capital markets for the fourth quarter of 2023, would like to enlighten you that the global economy was headlined with news representing difficult times. As you are aware, the effects of monetary policy tightening necessary to reduce inflation by most central banks, the withdrawal of fiscal support amid high debt, extreme weather events, geopolitical tensions in the Middle East, and the Russia and Ukraine wars were visible. All these factors weighed heavily on global capital markets, which impacted adversely on capital raising. Notwithstanding the above challenges, Zambia's GDP growth for 2023 was expected to be higher at 4.3% from the initial projection of 2.7%. The domestic economy in 2023 was stronger than initially projected. In terms of the outlook for 2024, the government hopes to achieve macroeconomic stability, as outlined in the 8th National Development Plan, despite the challenging global environment. Now, specifically with respect to the performance of the capital markets, the Zambian capital markets continued to show resilience during the last quarter of 2023, as evidenced by increases in key market indicators such as market capitalization and the Luse All-Share Index, which from now on I'll refer to as the LASI. The capital markets have been impacted by the country's economic performance, which continues to face challenges, including the delay in concluding the country's debt restructuring program with the Committee of Creditors. As such, to support the growth of the country's economy, the government's efforts are directed at restoring fiscal and debt sustainability, raise and safeguard social spending, preserve financial stability, and intensify structural and governance reforms to unlock Zambia's growth potential. On the other hand, the central bank has deployed various monetary policy tools to address inflationary pressures experienced in 2023. The Monetary Policy Committee raised the policy rate by 100 basis points to 11%, which is informed by the current and projected upward trend in inflation away from the 6 to 8% target range, which is anticipated to make progress on debt restructuring under the G20 Common Framework and slow growth in the financial sector. Further, the Bank of Zambia raised the statutory reserve ratio by 3% to tackle inflation and foreign exchange challenges. These measures were aimed at mopping up liquidity, reflecting the bank's commitment to monetary stability. On the exchange front, the kwacha closed at 25.71 to a dollar, which is representing an annual depreciation of 42.3% compared to 8.4% for 2022. Interest rates, as represented by the average nominal lending rates, trended upwards to close at 26.6% in December 2023. Higher interest rates have negative effects on capital markets. The global economy has faced challenges in the last quarter of 2023, which has impacted global capital markets. Despite this, Zambia's capital markets showed resilience, supported by positive economic fundamentals, and the country took proactive measures for fiscal and debt sustainability. The central bank raised interest rates, influencing investor behavior in equities and bonds. Capital markets saw substantial increases in savings, market capitalization, and assets under management. The Lusaka All-Share Index showed notable growth driven by increased stock prices. The CIS sector experienced growth with a significant rise in domestic and foreign assets under management. Corporate bonds showed resilience with a 38% increase in Q4 of 2023 compared to the third quarter. Green finance initiatives, including the registration of the debut 200 million green bond, were also positive developments. The Capital Markets Master Plan made progress in terms of establishing the governance structures. The inaugural steering committee meeting of the CMMP signals the commencement of the implementation activities spearheaded by the 5 working groups. The World Investor Week events further emphasized investor resilience, crypto assets, and sustainable finance. Overall, Zambia's capital markets demonstrated resilience, growth, commitment to sustainability amidst global economic challenges. In support of government's efforts to grow the economy, the Commission will continue to focus on the following key projects or work streams. 1. Implementation of the Capital Markets Master Plan in order to ensure that the country records gains on the short to medium term objectives set out in this plan. The second is that the green and sustainable finance initiatives will be undertaken in tandem with the Finance Mainstreaming Working Group and other partners, including those that have been noted earlier. Number 3 is the regulatory reforms and systems review, including the enhancement of regulatory frameworks and acquisition of supervisory technology, which is also referred to as SupTech, to improve efficiencies in the execution of our mandate and meet the standards set out in the SEC Service Charter. Number 4 is the National Financial Inclusion Strategy, the second version. Number 2, to promote access to finance for micro, small, medium enterprises and the rural and underserved population. And finally, the investor education and awareness campaigns, which are aimed at encouraging participation in capital markets and protecting investors in Zambia. I thank you.
So the Capital Markets Master Plan is the country's blueprint for the development of the capital markets in Zambia. It's meant to run from 2022 all the way up to 2031. And the whole idea of having a capital markets master plan is to make sure that we streamline the way we do capital markets development in the country, to ensure that capital markets are contributing to the development of the country's economy. So if you look at the capital markets document, it's actually anchored off the 8th National Development Plan. And this is to make sure that whatever is happening in capital markets really contributes to the overall plan that we have as a country for development. One of the things that we want to do under the capital markets plan, which has been split into 5 development themes, is to ensure that we tackle the existing products, what we call the traditional products. So enhancing the bond markets, enhancing the traditional markets to make sure that there's more participation in those areas. The other development theme is what is known as the new and innovative products. As you may be aware, there's a lot of innovation that's going on, especially in information technology. The young are always using technology to access financial products, so we want to tap into that resource. We are also looking at other sources of financing, such as private equity, venture capital, which we have not traditionally tapped into. So we are looking at those as new and innovative products, and of course, green bonds as another new and innovative product. Capacity building is also part of the CMMP. So building the capacity both of the country in terms of how much are we able to raise, increasing the depth and also the supply side, and also the capacity of regulators to oversee the capital markets. And by regulators, we just don't mean the Securities and Exchange Commission. We mean other regulators such as the Bank of Zambia, the Pensions and Insurance Authority, and any other regulatory body in Zambia. The final element of the CMMP is increasing the capacity of various stakeholders to participate in capital markets, be it retail, corporate investors, and also SMEs and large corporates' ability to raise funding through the capital markets. What we hope to see by the time we are done with this plan is real tangible results that we can be able to point out to. The most notable one is the number of listings. We hope to see our capital markets grow. We hope to see our collective investment schemes grow to about 260 million. We hope to have a rating for the country. I don't know if you've heard about frontier ratings and so on. So Zambia currently doesn't have a rating that signals to investors out there what sort of investment grade country it is. So we hope to have a rating as an emerging country by 2031. So it will be a lot of positive indicators that you'll be able to see by the time the plan is implemented. And of course, we hope that will then contribute to economic development and the other things that really matter to our citizens. Thank you.
Hello everybody, welcome to this special episode of the Financial Insight Show, where we are here at the Securities and Exchange Commission during the 2023 quarter 4 performance. And I'm sitting here with Mrs. Diana Sichone. Mrs. Sichone, welcome to the Financial Insight Show.
Thank you very much.
Okay, so a fantastic performance in respect of the capital markets for Q4 2023. And what are your key highlights about how the capital markets performed?
Thank you very much. Overall, we've had a growth across the different product lines of about 9%. So we've seen growth in the assets under management for the collective investment schemes, both for local and foreign assets under management for CISs. We've seen capital appreciation on stocks on the LUCE. We've seen an increase in the number of persons that are coming to be first-time users of the capital market, so increase in the number of investors. So overall, we've seen quite a good performance.
That's fantastic. We're definitely hoping to see the great performance of the capital markets trickle through into the economy generally.
Yes,
Absolutely.
because capital markets are an enabler for capital formation, and once capital is formed in the capital markets, then it's translated into the growth sectors of the economy.
Indeed.
So
indeed.
we're hoping to see the growth in
Absolutely.
a few years or months to come.
Absolutely. So now I'm going to focus specifically about this CMMP.
Okay.
And if you could just explain what it is, the Capital Markets Master Plan, as I understand it.
Yes.
If you could just tell the audience what that is, what its objectives are, where we are with it, and what the future looks like.
Okay, so the CMMP, which is the Capital Markets Master Plan, is the very first blueprint that we have as a country, a 10-year strategy for capital markets growth and development. So it's got a growth period of 2021 to 2031. So there's a 10-year period in which we want to see our capital markets improve and grow, because we know that capital markets are an enabler for growth of the economy. So at the moment, the CMMP, having been launched late, sometime last year in 2023, early 2023, even if it's a 2022 plan, it was only launched in 2023. So some of the things that we are seeing are, for purposes of implementation, we need to start running, and for instance, the governance structures are already in place, so that is a good thing to have. But in terms of where we see ourselves, for instance, to give an example of one of the highlights in the CMMP, it needs to see the country have at least 40 listed companies by the end of the period. We're currently seated at 23, so we still have a long way to go. For the 30 years that the capital markets have been in existence, we only have 23 listings. But the plan looks at having 40. We're looking at having a frontier rating under the Morgan Stanley rating index. So that gives investors the confidence that this is a country that is worth putting your money in. So it's a very, very important rating. As currently as we stand, Zambia is not rated. We're also looking at having the first, one of the things is that we've actually already achieved it, the debut green bond issuance. We had a target of end of this year for having the first green bond issued. By 2025, we need to see an exchange-traded fund listed. So we have all these targets that are put in there. Another important one is the ratio of GDP to the market capitalization. So you see that we are currently at 20%. The target is 27%. So we started at 16, so we are on track to achieving what we aim to achieve in the CMMP. It has 5 development areas which are very important for purposes of achieving the objects of the CMMP. The first one is the enhancement of the government bond market. You'll notice that in the secondary market trading of government securities, first of all, even in the primary market, there has to be enhancements that have to be done, which then will improve the secondary market trading. One of the things is, for instance, having a primary dealership, where you have commercial banks that are able to purchase government securities in the primary market and then sell them off in the secondary market. So that will create a bigger pool on which the secondary market trading of bonds can then happen in the secondary market. So if that secondary market is developed, we'll see a lot of growth. The second one is for enhancing the traditional products in the market. So you have your shares, your bonds, your derivatives. Those are traditional capital markets products. There has to be development and growth in that sector. So we also have new products that we are excited about, such as the green bond. We have private equity, venture capital. We have exchange-traded funds and real estate investment trusts. So all those are planned to be brought out during this 10-year period. Then we have the 4th development area, which is the capacity building in the capital markets. And capacity building is across the board. It's not only for the regulator, not only for the market, but for everybody. Because you can imagine even an investor needs to be capacitated. They need education. They need to be educated about what their rights are as an investor.
So by capacity building, you're generally just referring to training and knowledge transfer.
It goes beyond just training and knowledge transfer, yes.
Okay.
Because you find that even the regulators ourselves need to be capacitated for us to understand, to work together well, to ensure that there's no arbitrage in terms of the work that is being done by the various regulators. So that is an important aspect that has to come out. Then finally, the last one is the improvement in the regulatory environment. So when you have all these development areas and with their various activities and action plans that are spelled out under each development area, you see how the capital markets will be able to position Zambia as a global green investments hub in the next 10 years.
Thank you very much for that. Talking about green, you've mentioned development of the green bond.
Yes.
And we've taken steps in that direction. I understand that there was an announcement of a green bond towards the end of last year. Can you tell us more about that?
Yes, it's an exciting time for the Commission because as you may be aware, the Commission has had the green bonds guidelines from as far back as 2019. So we've been looking for a debut issuer. So we've been quoting a lot of people in the market, and we are very happy that CEC was able to take up the challenge. And with their issuance, they've been able to register with us a bond of US dollar 200 million. And that is supposed to be used for a 200 megawatts power project, which is a solar project. So you can see right now we are battling with climate change and its effects. It's supposed to be raining right now and it's so dry. And you can imagine now in a few months' time, if we start having power challenges, it's because of the rain patterns. There's no water that is going into the water reservoirs that then generate the energy that we need. So by having these alternative power sources, such as solar energy, actually it's going to even to have capacity to keep it and storage capacity. So you can imagine how much impact it's going to have even on the economy of Zambia, because if there's excess, it will be brought back into the deficit that the country might be facing in a few months from now. So we're looking forward to, the first tranche was actually oversubscribed to the extent of $54 million approximately. So we're looking forward to the next tranche and encouraging the general public to invest in these renewable products, because you look at the benefits, it's not only to bring power, but it also has an environmental benefit for the nation as well.
So let me just get this right. CEC intends to build a solar power plant, and that's what this green bond is all about.
That was the intention of the registration and the issuance of this green bond. It's for purposes of coming up with the 200 megawatts solar plant.
That's fantastic news. Okay, so let's divert a little bit now from the green bond into this concept of sandboxing.
Okay.
I can imagine that not a lot of people might be aware what that is. I think I know precious little about it, so if you could enlighten us. What is sandboxing?
So just to bring it down to the simplest way in which you could understand it, as kids, we grow up playing in the sand, right? When you're playing in the sand, things in the sand are not really that concrete. You can play around, rub, be able to draw things, rub them off.
Build castles.
They collapse, exactly. So it's like a test environment.
Okay.
So that's basically what a sandbox is. So we have a sandbox framework here at the Commission, where we have taken into consideration that not everything that we have in the law or in the regulatory framework are things that are happening right now, because time is moving. Our laws are probably 20 years old, 10 years old. Our Securities Act is a 2016 Act. There are a number of changes that have taken place. Post that period, you have the cryptos and AI and all these things that are happening. Peer-to-peer lending, so many things are going on in the country and just the world as a whole. So how do we then get to protect investors, because these people that are offering these products are going to the very same investors that we're trying to protect. So how do we protect the investors? We then have to study these products, these new products that are coming up in a regulated test environment, so that we can limit the exposure, and those that will want to play in that space in the test period, they'll know that this is money I should be willing to lose if anything had to go wrong. It also gives an opportunity for us to be able to determine whether or not it's a product that falls within the regulatory space of the capital markets or not. If it doesn't, we then are able, after the test period, to refer the entity to the best regulator in the country. If it's a product that we believe should not be regulated, then it exits after a year of testing, and then it doesn't need regulation. But at least it helps us understand the product and then be able to test it, to know the flaws, to know what the positives are, improvements, what protective mechanisms can we put to protect investors, etc. So that's what a sandbox basically does.
Fantastic. So I'm going to end on a lighter note. Mrs. Sichone, I understand you are the acting CEO for the Securities and Exchanges Commission.
Yes.
What's exciting you about capital markets in Zambia, looking into the future? Where are we going?
So If you look at most developed countries, the capital markets are actually the biggest in the financial sector. At the moment, the capital markets are the smallest in Zambia, but this will change. And with the CMMP that we have, you will see so much growth, so much change in our space in the next 10 years. So watch this space. Will be an enabler for capital formation, because we'll be able to facilitate capital formation, to facilitate capital raising. So if people out there want to develop, for instance, the agricultural sector, they want to develop the mining, tourism, all these growth sectors of the economy, the capital markets is where you want to come and raise the funds. When you go to the banking sector, for instance, the amount of monies that you can be given are very limited. And the period of return that you're supposed to pay it back, it's also very limited. You'll be lucky if you're given above 5 years.
5 years, yeah.
You'll be very
Seems to be
lucky.
a standard. Yeah.
Yes. But for capital markets, it's for long-term capital raising. And if you see most of the projects, they're quite long-term in nature. Just to give an example of in Ethiopia, there is the Green Ethiopian Renaissance Dam. It's been constructed for the past maybe 12 plus years. If they had to get a loan from the bank, they should have had to pay it off within 5 years before the project concluded.
Absolutely.
So the banking sector tends to be limited in what it can provide in terms of the development that we need as a country. But the capital markets, that's where you want to be. That's where you want to raise your money, and that is where development will be spurred from. Thank you very much.
And it seems clear to me, you can correct me if I'm wrong, that the SEC is pushing for mass adoption of capital markets across the country. Am I right in thinking that?
You need to be in the capital markets. If you are not in the capital markets, then you will not develop even at an individual level, because capital markets gives you a chance to diversify your portfolio. Because if you're just playing in the banking space or in the insurance space, it's very limited. But look at the opportunities that the capital markets has.
Indeed.
Look at the new products that we're even looking at introducing. Exchange-traded funds. We are looking at private equity. We are looking at venture capital. We're looking at so much more than you can find out there. So if you want to be where it's happening, where everything is developing and projections are looking at making this the enabler for the global green investments hub, this is where you want to be.
And on that positive note, I would like to thank you, Mrs. Diana Sichone,
Thank you.
Acting CEO of the Securities and Exchange Commission, ladies and gentlemen.
Thank you.
This is the Financial Insight Show. My name is Clarence Chongo. I'm the CFO for Fizz. Get to know.